Good afternoon and good night, everyone who is joining us today. Welcome everyone to our webinar, Crypto Regulation in Australia. Today we are very specific in our topic because this is a topic that is bothering some regulator, and a lot of my friends and clients always ask me about this topic: emerging risks, gambling, and the role of crypto ATM, especially in Australia. So my name is Jess, and I'm guiding everyone here for this conversation today. And we have an incredible panel of experts today from across regulation, compliance, and blockchain intelligence. So without further ado, I would like to introduce my first panelist, Penny. Hi, Penny.
Hi.
Can you introduce yourself a little bit, who you are and what you do?
Well, I cut across 5 areas, predominantly payment space, originating from cybersecurity, AI, telco, and everything around blockchain. So with that, I've just been moving between the different realms and now bringing it all together. I cheekily coined myself as a CISO, preparing for the AI singularity, so everything around emerging tech, as well as the payment space.
Great, Penny. Next, we have Irina. So I know Irina is from Europe. Would you want to introduce who you are to our audience here? Over to you, Irina.
Thank you, Jessica, and hello, everyone. So I'm Irina Gorbach, Head of Regulatory Compliance at Crystal Intelligence, where I focus on AML and risk frameworks for virtual asset service providers, financial institutions, and public sector stakeholders. I've spent the past 15 years working across crypto, banking, gambling sectors with a particular focus on high-risk environments and supervisory engagement. Today, I'll be sharing insights from European Union Mika regulation and broader enforcement trends in crypto, especially around ATMs and gambling-linked transactions, and what lessons might apply to the Australian context as well. Thank you, Jess.
Great, Irina. Okay, next, we have our minority person here, JP, who represents the male population, the only one. And over to you, JP. We want to know your background and today what you want to bring us to this table. Over to you, JP.
Okay. Thank you. My pleasure to be here and to play that minority role. So I'm JP Monck or John Paul. So I work in a few capacities, mostly in financial services, risk and compliance. I'm also a practicing lawyer and accountant and operate a boutique firm that advises on all things ranging from licensing through to regulatory issues and opining on some of the broader kind of industry trends. I moonlight as an academic at the University of Sydney, UNSW and Macquarie University across some CPA topics, some risk management and some data analytics and modeling just for fun. So my PhD was in governance and risk management and the link between those two things from a pretty boring standpoint. But I've served in the past as a vanilla banker, as a regulator, and as a consultant to the industry. So keen to bring whatever perspective and value that I can to this, both from traditional finance mostly, but as the transition, if it ever gets to this country, looks forward to the future.
Great. We have an ex-regulator on this table today. So without any further ado, I will get started. So now we want to explore how Australia is approaching crypto and gambling and how ATM regulation is actually evolving and how we can learn from EU, where Irina's point of view will be very useful for this discussion. And before this, can we pull up the poll number 1? We want to know the audience and how are they really work with crypto, ATM, or gambling? We want to know the background. So I think there's a poll here, and everyone can just start clicking on that. While we are getting the analytics done, can we pull out the map for the Australian map on the crypto, how they are scattering like mushrooms? The exact number for the ATMs now in Australia is about 1,900. Let's sit in for this number a little bit here. 1,900. So when I was doing Hong Kong market, I'm still doing Hong Kong market and I deal with the HKMA. By me telling them last few months, actually it's 1 year ago, that they have about less than 100 ATMs. This is a bit shocking to the regulator because it all grow outside their control because it's supposed to be P2P. Fast forward a few years ago when I deal with Royal Malaysian Police and the Securities Commission Malaysia and also the MAS, Monetary Singapore Authority, getting 6 and 7 authority of this ATM exact location, they already freak out. So I feel like this is going to be an emerging risk for regulators, for enterprise. And of course, if you are using it in a bad intention, this is going to be an opportunity for you because cashing out looks very easy now. You have 2,000 choices that where you can off-ramp your money here. So before we start listening to our ex-regulator JP's thought about this crypto regulation in Australia, can we get another second pull out to see that what is the use of ATMs so we can get all the analytics done and we can start the discussion here. So the first one, I get the poll result back. Most of our audience are from crypto blockchain company and then financial services. And we do have law enforcement crowd here, academics, and then some minority from the gambling and gaming industry. That's great. That's great. So poll number 2, what is the use of crypto ATMs for any interaction with any organization? So I think while our Crystal team is digesting the number, let me get the conversation started. So, Mr. JP, can you walk us through how crypto is currently regulated in Australia? And I think most of our audience want to know who is exactly the regulator and how are these compared to Singapore, Hong Kong, and Dubai? I can pick some of it. So let me start on the Hong Kong first. When I was in Hong Kong April this year, I'm able to meet with the Hong Kong head of AML, HKMA, Mr. Stewart. He said that Hong Kong has pushed this piece to the Custom and Excise Department just because that they really have no manpower to do all this regulating part. How is it in Australia at the moment, JP? Would you want to share?
Yeah, certainly. Look, it's an interesting one, and I suppose there's unfortunately no one central regulator who puts their hand up and says, "Oh yes, me please, I want to do all the crypto stuff." So we've had a different set of attitudes, and I'll just walk briefly through each of them. I believe, and I could be wrong, I believe it was the ATO who was the most innovative, who said, "I think it's an asset because I'm going to tax it." So I think because of that, that was a great favor because then the others had to say, "Well, if it's an asset and it looks like finance and quacks like finance, it probably is." So then the others had to sort of weigh in as well. Austrac certainly has had, so Austrac is the AML regulator effectively. So how we've broken our framework up is we have an AML regulator, we have a prudential regulator in APRA, we have the Reserve Bank of Australia, who runs the central bank function, and we have the Australian Securities and Investment Commission, or ASIC, who is the corporate securities regulator, which covers investments and whatnot. I think, if I'm not wrong, the MAS does like all of that in Singapore, so it's a lot easier to identify who exactly I'm going to go speak to. Probably why Singapore is doing a bit better in this space. But frankly, when it comes to advising or dealing in digital assets, you now need an Australian Financial Services license or an AFSL. So like anyone else who's a financial planner or who's dealing in products, you must at least have a license to deal with at least retail customers. If it's OTC, we can go off on a tangent, but I won't do that right now. But also if you're providing advice on crypto, which I don't think anyone does, you'd have to tick that box as well. And you have to demonstrate competence in that area to qualify for such a license, which is hard to do when we don't have a history, but that's an interesting one. Thanks. There's a comment as well to be registered as a DCE. Yes, it's correct. And yes, certainly you do have to register with Austrac as a provider of designated financial services as well, most likely. And if there's any on-ramp, off-ramp, etc., you're most likely dealing in remittances. So it can get pretty complicated. So that means that if you're dealing with anything into and out of fiat, then you're most likely going to have obligations with regard to transfers. You're going to have obligations with regard to suspicious matters as well. So So I think it basically says that the regulatory framework is quite reminiscent of the traditional finance landscape. But unfortunately, or fortunately, the regulators are probably the most innovative because they've actually designed and implemented a framework that appears to be fine. But there isn't much interaction, and that's large. The fact that I think the big gorillas, being the big four banks, don't particularly want their lunch to be cut for them. So it's not very easy. In fact, it's almost impossible to on-ramp in this country. Not so hard to off-ramp, but it's an interesting dichotomy.
Great. But I want to ask about the category because it's very important. Where do you think ATM sits in which category? Is it remittance, transfer, OTCs? What is the category for that?
Well, I think you'll get different answers depending on the ATM provider, probably. But I think certainly if you've watched the recent actions from Austrac, they're certainly not particularly comfortable with. I mean, looking at the number of ATMs, I mean, I learned something as well just seeing how many were on that map. That's I can see why there's enforcement action at the moment because I don't think there's that much demand for that product. We don't even use regular ATMs in this country anymore. So chances are there are some definitely nefarious cases, and you wouldn't see Austrac taking significant action in conjunction with the AFP unless they had a reason to do it. So I think that of itself is interesting. To your question, depends how the ATMs work, I suppose. Like, where is that? What are you feeding it, first of all? What crypto is coming out of it? Where is that coming from? And I think there are some characters who will, I guess, attest that they don't have any obligations and there's no remittance involved and it's not a supply of financial service, so I don't need to do anything. That's an interesting opinion, and some lawyers might even enable them to have that viewpoint. They'll pretty quickly get hit with a summons and a show cause and some other notifications, I think, with that attitude. So it depends on a few factors.
Great, great. So just to share, when I was still working with the Hong Kong situations, if they have more than 100 ATMs, actually it's just run by the few Hong Kong ATM. I don't want to name it syndicate, but it's a company. So they may have a lot of machines, but technically the wallet, if you aggregate them in our blockchain analytics, it's just that few people. Probably it's the same UBO. So I think that part, maybe the graph just now can show you the location of the ATMs, but you need to do more in-depth analytics on that and to see who are the real people really controlling the market. I think there's just going to be that few players who really just, have the machines operating, but the account is still managed by that few people. That's what I'm trying to share. So great, JP, thank you for your insight. Now I want to move to Penny. I'm not sure you have worked closely with any operators on ground, but I do want to know, as a native Australian, what is your observations and how crypto ATM are being used in Australia today? Really, because you're Australian and I'm from Malaysia. So you can let me know what is your observation. Penny, over to you.
Well, all those ATMs popped out of nowhere basically overnight. 10 years ago, there must have been like 1, 2, 3. Turned around and they're just everywhere now. So as according to the map. But the most bizarre observation that I had is the fees. They range between 6.5% to 15% just for the conversion. Yeah. Why would you? I mean, if you go to an exchange, it's 0.1 to 1% at most. So if I were to, want to buy crypto or sell crypto, why not go to exchange? So I don't understand, I guess, the demographic, and you'll have a bit more detail around this. Why would you pay 6.5% to 15%? When 10 years ago, we were complaining about traditional payment systems charging between 6 to 12%, almost 17%. And that's where payments innovation has come in. That's kind of my observation. I have started to see them everywhere. It's like when you identify that there's a red car and you mention it, all of a sudden there's red cars everywhere. So I'm going through shopping and I'm like, I think that's a crypto ATM. Wow, that's new. So yeah, that's kind of my observation, is mainly around the fees. And why would you want to pay that much to convert? Yeah.
So maybe just to share something interesting from my field work here, that in Cambodia, Hui Wan Pay, I'm sure you know who is Hui Wan here. The conversion fee is 10%. So this ATM is a little bit lesser. And I'm not comparing directly with Hui Wan here, but if you can go for a proper exchange and it's only like 0.6% and you're paying 6%, maybe you have the answer, but we don't have any concrete evidence to make any conclusive decision yet. But let's move on. Okay, thank you for the sharing. So back to you, JP. Let's touch on a bit of this gambling risk here. How is crypto currently used in both licensed and unlicensed gambling platform, and also the response from the regulator? Would you want to share a little bit with the audience here? Over to you, JP.
Yeah, sure. Look, I'm not that experienced in gambling. I don't really like losing, frankly, so that's not so good. But I think I haven't seen a great deal. I mean, only from the news sort of announcements and updates and the like. Clearly, the volumes must have increased quite substantially, and I suspect you have licenses in Australia that have been somewhat complex over the last probably decade, both between so we have a couple of operators. We have Crown down in Melbourne. They're also in Perth. They have a quite big, beautiful tower in Sydney. I don't know to what degree the license is progressed. And then we also have the Star in Sydney and the Gold Coast. So those are the kind of the big brand names. We have gambling that's got different laws in different states. So some people love what we call the pokies. So you go down the pub, you press some buttons, flashy lights, a bit like the pachinko machines, but you're getting sloshed a bit more at the same time. So that's just more of our hang up or pastime. Now, some of the bigger casino brand names, I think there's been more scrutiny on them from an AML standpoint in terms of both KYC, transaction monitoring, and generally not having a wheelbarrow full of cash going around the hallways of the hotel with the security cameras taped over and whatnot, because that looks a little bit sus. So there have been some minor issues with respect to licensing. And then we also have the online environment as well, where it's possible to operate effectively just through a website. Now, suppose you're accepting crypto as a form of payment rather than, I guess, Stripe or cash or whatever else. I can only imagine that there are different assumptions around what do I need to do in terms of reporting, or what do I need to do in terms of identifying the source of wealth, source of income, source of funds, if anything at all. So I suppose it wouldn't surprise me to hear that the volume of inflows into that industry are probably proportionately becoming greater from crypto, less from AUD, for example, as a natural consequence of the clamps tightening from a regulatory standpoint. And then if that's the case, then it probably follows that there's no surprise that Austrac's attention would then move towards effectively following the money, because that's one of the strategies that the regulators here will use. If that's where the flows are suddenly moving towards, then who's behind that, who's actually moving it, and then I'm suddenly more and more interested to find out those details. And if providers are playing along, they'll still file suspicious matter reports and whatnot. So I would suspect that Austrac would know quite a lot from the triangulation of those kinds of inputs. So that's a bit of a triangulation of issues there.
Okay. So from a non-Australian perspective, I think that kind of STR or like data that's flow up to the regulator, I feel like it's a little bit more than the countries in APAC, because like in Malaysia, the moment that is in like Indonesia and Malaysia, because I work with the police in these countries, the moment there's a gambling risk, they just escalate it to the Criminal Investigation Bureau. They just don't want to have any STRs. They go straight to the matter and say, hey, we are a Muslim country here and we don't allow this to happen. But that is just very passive, because they really want to know what is really happening and affecting the local landscape, regulated landscape and all this. But I think Australia, by getting this a little bit of information is great, because with this information you sort of like can do the test ground, how you can come up with the regulation and to curb this gambling risk. Stay on the same topic here, JP. So there's a lot of discussion around.
If I can,
yeah.
Oh, sorry, I was just gonna.
Okay.
You prompted me to another good thought there. If you have any form of registration with Austrac in this country, or which you'd have to be, and you don't file any SMRs in a month, they will probably give you a friendly call and say, hi, I noticed you're operating a business and you're not actually filing any reports. So are you out running a business? And if you are, we know crime happens, it's not your fault, why aren't you reporting it? So that's another interesting cultural thing that they do to kind of motivate all of us compliance officers to say, well, yeah, there's a few that look a little bit. I might not have complete information, but certainly I should report something. And if all of us report little bits of the jigsaw puzzle, they're the only ones who see the whole picture. I imagine they get a pretty clear report. So that's just a slightly different attitude, which I think is a good thing in some respects. Sorry, to your other question.
Of course, gambling, risk, crypto, they are two big red flags in terms of risk level or risk assessment. These are really high up compared to traditional financial products. And if they do not have any STRs or suspicious transaction reporting, some deficient is happening somewhere in the AML system. And I think this is a good culture to have, because any threat to money laundering law is that there's no record. That is the worst can ever happen. If there's some sort of like reporting, it's still okay, because there's monitoring, detection risks, and we can still figure out the regulator, the license exchanges, those that want to be intact in the whole regulatory framework, they still know what to do with that information. But on the same point, JP, so what do you think that this licensing regime mean for the ecosystem, especially for the ATMs? Because maybe the law is a little bit now still gray, and are they moving forward and say that, hey, I'm really operating in this business, I want to work actively with the regulator, and I'm legit, I'm just a businessman. So what have you observed so far in Australia? Would you mind to share if you have any experience in that or observation?
Yeah, sure. Thanks for that. I think generally speaking, if that's the attitude that someone has from a commercial standpoint, that I'm here, I've got a legit business, I've taken the time to understand the legislation and the rules, and I'm willing to play ball, like I will do what I need to do. And my sole line of business, my revenue, my target market is not criminals and drug dealers only. I accept from time to time, if I'm the weakest link or I'm perceived to be, they're probably going to target me. And you usually know when your firm is perceived or is on a Facebook group or a Reddit forum as, yep, that's the place to go do your laundry. Because you see the inflow. You know that on the front line. You know that from a compliance standpoint. So if you do that, if you have that attitude and you're not always getting legal advice to weasel you out of actually having obligations, I think generally the regulators will be quite accommodative, and they're quite happy to work with industry. So I think we do have some privilege and some luxury in that regard, because I know some jurisdictions, it's not really possible to engage with the regulator, and they'll only tell you gotcha when you got it wrong. So there's an inherent kind of fear or loathing almost, whereas here you can pretty much give them a big hug, or at least you can say, I've got my program, I'm trying to do the right thing, have you got any feedback, etc. And they're probably not going to whip out the 12 gauge and blow your head off in the first instance. You're likely to get warnings, you're likely to get coaching, and they'll even tell you, hey, your program's not great, you might want to get a consultant to help you rebuild it or enhance it. So I think in that way it's a pretty collaborative framework. So I don't know why some don't want to work with it, but that's just a personal view, I suppose. But in that regard, if you're here to do this, you can do it. Yeah.
It's great to know on this collaborative effort, because it's bilateral. Like, seems like everyone just want to make things. You want to do the business, regulator can do the job, and everyone is a win-win situation. Okay, thank you, JP, for the sharing. Penny, I think you have mentioned the challenges around the risk appetite before. And would you want to elaborate on how treasury teams and banks are approaching crypto ATM providers? And how about this lazy risk concept? Would you want to elaborate a little bit more on that, Penny?
ATMs specifically, traditional ATMs, they've got the checks and balances in place. Comparing that to Web3, because I cut across Web 2 and Web 3. So I've gone from traditional payments, and since 2009, because of cybersecurity, I've been in the Web 3 space. So I'd say I'm two worlds. And if I compare the different ways of actually managing these ATMs, Web 2 follows the traditional Web 2 compliance regimes and so forth. Web 3 appears to be, when I look at the KYC compliance, some have, some may be a little bit loose, maybe something to look into there. But the fundamental thing is managing the systems, managing the assets is quite different. So a CFO or a treasury manager in Web 2 will have fundamentally different ways and different controls to manage their funds. I mean, I look at the Bybit hack, and a normal CFO would just have a meltdown completely. I mean, that was managed well, and they're the better of the lot, but that was like $1.5 billion that just went, gone, right?
Missing.
And it's different. Like, yes, you have bank, you have correspondent bank, you've got the checks and balances, you've got the different tiering of authorization. All of a sudden, you're moving funds from cold wallet with the click of a few buttons. You've got to check a whole lot more different things. But ultimately, we both want the same thing. How do you prove that you're operating a business honestly? And that's why we both need to collaborate, from the builders, the operators, as well as regulatory. We want the same thing. We don't want to support scammers. We don't want to support, ransom, what do you call it, hackers that ask for ransoms.
Ransomware.
Yeah, and how do we make that happen? How do we put checks and balances in place, some enforcement to curb that type of behavior? So there's still a lot to go from the crypto ATMs versus traditional ATMs.
So this is also cultural base in Asia, not Pacific, but Asia, like say China, Malaysia, Indonesia. Businessmen do not want to talk a lot because they have one and only goal to make money. For them, collaborative means like that means I have to increase my compliance costs. That means I have to do more discussion with regulator. And then when I have given you more insights, are you going to regulate me and control me? Things like this is always going to be a power struggle dynamics. And it's also linked with a lot of cultural, background of these entrepreneurs. Western world probably is easier, okay? Because Tell me, Penny.
I've got to weigh in. So I've rescued and salvaged about 50 failing digital projects in enterprise and government. And there's two things that kill a project: InfoSec security and legal and compliance. And the reason why my projects are successful is I reach out to them. You have a coffee with the head of security and someone who heads up legal, compliance, and regulatory. Likewise, if you are launching a business in Australia, you do need to look at those two areas. And as JP said, regulators here, they don't have sharp teeth unless you've done something drastically wrong. So they're willing to walk you through. The door's open. You can ask questions and, reach out. I want to do this type of business. It's quite new and innovative. Is it crossing any lines here? And if you involve them early on and walk them through, they're unlikely to pull your project business in the 11th hour because you've checked, you've informed, you've checked, and get it in writing. I mean, that's the way I would approach doing business here.
Great. So thank you for the sharing. And I want to set the tone for Australia from the two Australians that we have on this panel. And because we want to understand, because this crypto and gambling risk and the rising number of this ATM is a little bit, I would say the number we can't ignore and sweep it under the carpet, right? So I want to bring the stage now to Europe, where Irina can step in. Irina, I know that you work with a lot of European regulator, and you are, actively promoting Mika. And of course, I want to know from your perspective, you have seen that Austrac recent cases use it or lose it crackdown on inactive digital currency exchanges. And can you explain how is that impacting the ATM space? And of course, from the compliance standpoint, what is your view on this?
Absolutely. So Austrac moves to cancel inactive DCA registrations send very strong message. You can't be registered just to be legitimate, right? You have to actually operate with oversight. And crypto ATM fall under the Austrac DCA category, as we mentioned before, meaning they are required to be registered with Austrac, comply with AML Safety Act, conduct customer due diligence, file threshold transaction reports and suspicious matter reports. And I like the GP's one, 0 reports, red flag, right?
Yes.
But enforcement has traditionally been light. That's why in the April 2025 crackdown is so important. And Austrac found that many DCs hadn't updated their status in years, and some were linked to dormant or under-monitored ATM networks. Those entities risk being co-opted by illicit actors or sold off as shell companies. So what actually defines a legitimate crypto ATM in short? It has a clear operator who is registered and actively reporting to Austrac. It has embedded QAC measures, as Penny mentioned, whether though ID scanning or transaction limits. It's monitored for transaction patterns, not just high value, but also structuring and scam typologies. And it maintains record of wallet addresses and fiat sources as well. Anything less than that, especially anonymous usage with no real-time monitoring, is non-compliant under the Australian law.
Okay, so this is the main gist of the question, is that you work closely with the regulator in Europe. Have you seen something similar action on these crypto ATMs and gambling risks in Europe? Since you have heard what JP and Penny shared, and also the Austrac you share yourself, what do you see the
Sure.
similar action in Europe? Yeah.
Yeah, we have some examples, and the tone in Europe is even sharper. In Germany, for instance, BaFin seized over a dozen legal ATMs in 2024, including machine operated under the fake or expired registrations. In the UK, the Financial Conduct Authority declared all crypto ATMs illegal unless registered, and not one operator had legal status. That led to enforcement raids and machine shutdowns in London, Leeds, and elsewhere. The enforcement approach in the European Union is increasingly proactive. They are not just waiting for an ATM to be abused, they are making sure everyone is traceable, licensed, and accountable.
But how they get the data if they're proactive? Do you know how they get the data, since the regulator in Europe is so proactive? I'm interested to know.
Well, yeah, they have some tools, right? They're using probably some intelligence tools to identify the non-operational, not allowed to operate ATMs or crypto gamblings, for example. And we've seen regulators move from passive supervision to data-driven risk detection. In jurisdictions, for example, like Canada, authorities are using wallet-level analytics to detect ATM activity tied to fraud typologies. A common case is where a victim of a scam is unstructured to deposit cash into a nearby crypto ATM, and the funds are routed to a high-risk exchange or a money laundering hub. European FIUs are also monitoring wallet clusters to identify cash and endpoints. So even if transaction comes from a legit ATM, regulators can analyze what happens to the crypto afterwards, whether it flows into online casinos, mixers, or is broken down into structured transactions. In Australia, this is just starting. Austrac has recently begun building a more searchable DCE registry, which will eventually help match real-world operators to wallet activity. But more coordination with financial institutions and analytic tools is needed to close the loop.
Got it. So I think for the sake of the audience here, they will also want to know that in terms of the crypto ATM, how does Mika approach compliance is different from Austrac? So I think one is quite established in terms of regulation. One is still very collaborative and still figuring out. So what do you think is the differences at the moment that you have observed, Irina?
Right. So the European Union market in crypto asset regulation, Mika, is Europe's attempt to create a single harmonized crypto framework. It brings together previously fragmented national laws and introduces one license, one rule book, across the entire European Union. Importantly, crypto ATMs are explicitly within the Mika scope. Operators fall under the virtual asset service provider definition and must apply for licensing in one European Union member state, implement robust ML safety programs, report suspicious activity, all pretty similar to the Austrac requirements, and where applicable, enforce the travel rule, even for cash transactions linked to crypto transfers. And one key lesson from Mika is regulatory precision. The law defines responsibilities clearly. There is no ambiguity about where an ATM is a financial service. It is. Now, conscious that with Australia, while Austrac defines crypto ATMs as DCEs, the level of operational oversight still varies. So enforcement tends to follow incidents rather than prevent them. And Mika also introduces risk-based customer segmentation. For example, anonymous or unverified users are not allowed to initiate crypto fiat transfers above threshold. That's already forcing ATM operators in Europe to install ID verification modules, transaction caps, wallet screening software. And in some countries like the Netherlands, regulators require ATMs to link each transaction to a verified IBAN or customer account. That level of traceability is rare in Australia today. We're also seeing Mika applying pressure on crypto gambling use cases, while European Union law does not prohibit it. Outright, regulators are enforcing stricter source of funds controls. For example, if someone tries to deposit crypto into a licensed betting platform, they must prove wallet ownership and transaction legitimacy. That creates a barrier against using crypto as a laundering conduit through gambling.
What's the threshold that the minimum that I can get away before I'm complying all the regulation on me if I'm a bad guy? I just want to know what's the maximum threshold I can skirt away with all the regulation. 2,000, 1,000 euro? What's the transaction for that?
Well, I'm not sure if you asked this question from ChatGPT, it's gonna answer to
No,
you.
no, no,
Actually,
no.
I just
No, I did not.
try.
I asked from my personal point of view. I'm just trying to see that like travel rule, if it's $1,000,
Yeah.
I try to make 950 so that I don't need to comply with the travel rule compliant. What is the threshold that if I want to trip in crypto ATMs or whatever gambling, what is the threshold per transaction? Do you have the answer?
There is a threshold, it's 1,000 euro, right? However, if it's 999, if you saying if you are trying to withdraw this amount, just to be under the reporting threshold. So there is another risk scenario when it comes to practice, it's structuring, right? And the tools, analytic tools, they can easily spot
Transaction
this
monitoring tools.
structuring. Yes, exactly, this structuring technique.
Thank you. I learned a lot from Irina, and because I don't come from Europe space, and to listen from a practitioner who is really handling European cases, I think we benefit a lot from Irina sharing. So now come back to Australia, and I want to ask JP, just based on what Irina shared with us just now, what can Australia learn from Mika when it comes to regulating crypto-linked gambling platform? At least the first few thoughts on your mind. What do you think that we can learn from Irina sharing about Mika regulation?
Oh, look, I think possibly all of the above. Look, typically Australia is a proud importer of European regulations. So, I mean, that starts with the Basel Accord. In general, we adopt mostly that in full. Sometimes it's to our detriment because we adopt it completely during the consultation phase, and then sometimes they walk back some of it, and Europe doesn't even do it, and then we say, oh, we've already committed it. Whoops. So I think it's good and bad. Look, I think It possibly, given the current wave of action that's undergoing, it might be quite sensible to implement some of that. We obviously have slightly different demographic and geographic issues in that we're not. I mean, we don't have any other countries you can just walk over into. There's an ocean most directions or a sea in the other one. So I think in terms of wealth or cash finding its way around, it's going to come off a plane or a Disney cruise, maybe at best. So it's going to be relatively obvious in terms of the physical movement of it. But in terms of that, I guess analytics around structuring and the like, I think make perfectly good sense because I mean the same kind of these are the same old kind of tricks that have been done before in regular ATMs, in wire transfers and other kinds of situations. So how would this be any different? So I suspect trying to have as much of a robust framework around crypto and crypto transactions to the extent that we can is going to create a lot more trust in terms of seeing it as a viable alternative to other kinds of currencies. So that seems to be implicitly where the regulators are heading, and I believe that would be a good step in the right direction. The hard part is motivating the larger financial institutions to actually play ball. And I mean, just this week, we have a similar issue, totally different topic, around credit card surcharges. We may be the only country on earth where we whack an extra 2% on whatever you're trying to pay with tap and go just because we can. And then the central bank decided, no, we're going to make that illegal. So you're going to have to find another way to extort people, which of course they will. But I think it's more of a concern that the industry needs a bit more investment and a bit more participation, frankly, from good, legitimate players who make it convenient for consumers to actually adopt the product. So I hope we'll see that. But I imagine that will come with a side dish of some regulations along the way.
Great. So is there any specific gaps that you see the current or the proposed legislation in Australia that Mika addresses more effectively? Just pick if there's any gap. What do you think?
I'm not entirely sure. It depends on interpretation, I suppose, at the moment. But I think it clarifies a little bit. I don't know if Penny's got a view herself as to how that might work in this context, but I think it'd be consistent with our framework, let's say, at least the intention behind it. But I'm not aware of any major exploits in this market right now that would be fixed, let's say.
Penny, anything that you can observe or any gaps that after listening to Irina, is there anything that Australia can mitigate that effectively? Any sharing, any observation, any opinion?
Opinions. I do like the EU because they are the first and they promote privacy preserving technologies, privacy preserving controls. They did bring in GDPR, probably a bit more than we needed, but that's a good step forward. And I do like their mission out on privacy preserving identity in the wallet. So zero knowledge proofs, rather than handing over your passport, all your details. If you just need to know that they're over 18, then you're only sharing that you're over 18. So you're not sharing all your information with the provider. Then they've got to secure it. So I love that the EU's bringing that into play as well. And hopefully that has some influence within the Web3 space, whether it's crypto ATMs, whether it's exchanges. We have a combination of that and proof of clean funds. So I'm hoping that will.
Yeah, I suppose, yeah, in that regard, like the difference is whilst registration with Austrac is a thing you must do, it's sort of like I can pretend I don't need to do it and then not do it. And then it might be 2 years later where I finally get pinged for that. So I suppose making it really clear where the bar is and having some specific licensing guidelines is a good thing because it means if you really want to operate this business, I think it provides a bit more clarity and less strategic ambiguity, which is probably a good thing.
Okay. I think we have a good topic on this Mika versus Australia. And definitely I've learned from Irina, Penny, and JP a lot because I came from APAC, okay? And we are still looking at how Hong Kong is regulating that OTCs and ATMs. And of course, going to my last chapter of the topic that I like the most, we are going to talk about recent enforcements. I would like to start with Irina. From your perspective at Crystal, which is the same company. You're my colleague, right? So how our regulators are using blockchain intelligence to detect illicit use of, particularly in ATMs typology and gambling-related flows. We actually put this risk score above 50% in our blockchain analytics. So Irina, would you want to share what is your observations with the regulators that you work closely with in Europe or anywhere in the world?
Yeah, we can have a look from the regulator's perspective as well as if you are just serving to crypto ATM, is it like your partner or client, right, perspective? So yeah, we have the risk score for the crypto ATMs is 50%, so it's medium risk. However, it's fully customizable. So depending on your risk appetite, on the risk appetite of the regulators, they can set up the risk score tailored to their business model if it's a private sector, or to the risk appetite if it's a regulator. And what we also noticed that we've seen that the regulators, they move from the passive supervision to data-driven risk detection, right? So the European FIUs, for example, they also they monitor in wallet clusters to identify not only the crypto ATMs but also the cash-in endpoints. And as we know that the money laundering cycle, it's either starts from the crypto ATM, either it's the final destination to launder the funds. That's why it's, let's say, I would say that crypto ATMs, it's more high risk rather than the medium risk. However, it depends on the jurisdiction, if it's strong AML safety controls, where the crypto ATM based and registered, or also the AML safety controls processes are in place, well established for the crypto ATM itself. So even if a transaction comes from the legitimate ATM, regulators can analyze what happened to crypto afterwards, right? It's fully traceable, whether it flows into online casinos, darknet marketplaces, or it's fully legit exchanges, crypto exchanges, or it's broken down into structured transactions, as we mentioned before.
Okay, thank you for the sharing pertaining to this European countries practices. JP, would you want to share, is there any recent enforcement actions in Australia, and how does the regulators and the law enforcement agencies in Australia is curbing or responding to that ATM and crypto gambling risks in Australia?
Yeah, so there has been a task force between the Australian Federal Police and Austrac. So that's been published, I think, in maybe it was a few months ago, as well as Queensland Police cybercrime unit. So there's a few cases where they have uncovered things like ATMs financing drug purchases and similar sort of activity. We also have a fairly active scam market, so the romance scam or the pig butchering or whatever you call it these days. And some of those have led to the refusal of Austrac to renew the registration for some ATM providers, and they've put $5,000 per transaction limits and scam warning messaging for some providers as well. And I think Johan's mentioned that just now at the same time. So there has been a bit of activity in this regard to try and curb or curtail it. And I think what's probably happening in the background is, I think the providers, as you mentioned, there might be just a few who are probably running most of the market. Those who are perceived to be falling short of expectations, like once you've had a few more intense regulatory scrutiny conversations, you're probably going to have more. So I think you can expect a greater deal of attention paid to your organization if you fall short. And the more often that happens, the closer you get to more serious kinds of enforcement. That's at an entity level.
Great. So I have another question for Penny. Do you think that enforcement is outspacing education and industry support? If it's that, what should change?
Outpacing education?
Mhm.
As in, there needs to be more education
Yes,
within
PPP.
traditional sectors.
Yes.
Absolutely. Again, Web 2, Web 3, the technologies, it's digital first, is fundamentally different. How we move funds, how we track funds, how we secure funds, everything. Like a traditional Web 2 player, if you lift and shift them, they will melt down completely. So there's a lot of education to get them over the line. And the best thing to do is just to pick something up, try, conduct a transaction, get a wallet, get scammed, because until you get hit, then you don't understand the reality behind it, to be able to secure that. Yeah.
Okay, great. Because of the time limit that we have, I want to ask each of you for one final question here. What is the most urgent compliance priority for crypto ATMs operators in Australia today? Irina, it might not be Australia to you, but what is the observation in your country or in Europe as well? I can start with JP first. What do you think that was most urgent compliance priority for crypto ATM operators in Australia today?
Sure. Look, apart from the enforcement action where they're probably going to rip out 1,000 of them, I think probably transparency, maybe that kind of registration requirement, and more sort of clarity around what it's being used for, I suppose. But that's going to be tricky with the current settings, but I suspect we might see some changes in that regard.
Great. Irina, not pertaining to Australia, in Europe, or what's your observation? Because you work with regulators around Europe.
The most urgent compliance priority for crypto ATM operators, not only in Australia, right? So I think it's simple. Make your compliance visible, or what JP said, transparent as much as possible, not just to Austrac, but to banks, regulators, other ones, the public. So because if your crypto ATM looks anonymous, untraceable, or inactive, regulators will assume the worst and act accordingly.
Okay. And also, Penny, is there anything you want to share? So I know that you come from Australia, but you can share around APAC, okay?
I think there's a solution here as well. Like if the demand is people want ATMs, and great. I mean, I don't understand. I hate ATMs. But if they want it, just how do you put the checks and balances in place? It doesn't make it, it's not hard. Like you prove the funds are clean, prove the source, do the wallet checks, scanning, and that's halfway there.
Okay, great. Last question, do you have anything you want to add on before we close this webinar? I think there's a lot of interesting discussion. If you look at the chats that Razin and Johan Van Twes, I think they have really, really good point they've been sharing while we are having our conversation here. Yeah. So yes, it's Surin, your question about 2,000. Today I checked, it's 1,900. I can show you the link where I get the information from. But do you have anything to share before we close this webinar off?
Visibility is new compliance.
Visibility, that's great.
That's a good one.
Okay, thank you all for a great discussion, and thank you to our guests, JP, Irina, and Penny. I learned a lot from you because managing APAC business, 14 countries for Crystal Intelligence, when it comes to the ATM and crypto business, and also the gambling risk, to be honest, you don't find a lot of information sharing. As I mentioned, it's a cultural thing, and my portfolios, I think we are really looking at how Hong Kong is managing that. Then that will be the leader for Asia Pacific for the moment, and a follow-up summary and recording will be shared shortly, and let's keep building a safer, more transparent crypto environment together, because we are going to make this business more sustainable. And of course, we are here to fight financial crime together as well. Thank you very much for your time, your patience, and I will see you guys next. Bye-bye. Thank you.
Thanks, Jess.
Bye-bye.